Hi everyone, and welcome to this edition of the Inspired by LTCI Specialist webinar series. Today we'll be talking about why long-term care insurance is so important for a happy retirement. It's really my pleasure to have on the line today Tom Hegna. Many of you know Tom. He's out there on social media. He's doing seminars virtually every day. I've read his book, Paychecks and Playchecks, about retirement solutions for life. And just a quick anecdote about that. I'm reading about a solution which he talked about in the book about legacy planning and leaving an annuity or an IRA to your kids and then kind of bequeathing that to future generations. And late last year when my grandmother passed away, she actually left our family an IRA. And what my dad did was he disclaimed it to me and I disclaimed it to our kids. So, you know, every year for the next 80 years, my kids are going to be getting a paycheck effectively from my grandmother with her legacy in it. So I thank you, Tom, for that strategy, because it personally helped my life. But if you don't know Tom, he's been around the long-term or the insurance industry for many years. He was with New York Life and with MetLife. He served in the U.S. Army, and you know, for me, he's really a mentor because I learned a lot from him and on the annuity and on the long-term care planning side. Real briefly, I just want to share with you a little bit about this series for those of you that are new. We're really trying to have people on that are motivated for this mission to help more people get a long-term care plan. And whatever solutions you find to do that are very valuable, but there are so many people out there. You know, there's 44 million people today that are caring for a loved one for long-term care. Yet the expertise is particularly harder to find today. So, you know, we'd love to have guests on here to share with us their tips about how to get in front of new clients, new prospects. And we do record these sessions. So if you want to listen to this session again, we'll have that recording available for you on the Agent Resource Center. If you go to the www.ngl-essentialltc.com website and you log in, you'll see this icon on the home page, and you can actually access all of these recorded trainings. Tom is also going to stay after his call for a little bit to take your questions. So please feel free to type in your questions into the GoToWebinar question panel, which we'll be taking at the end here. So without further ado, let me go ahead. I'm going to transition this over so Tom can go ahead and share his screen. And Tom, why don't you go ahead and kind of kick it off here?
Well, thank you, Mark, and thank you all for attending. Thank you for having me. I'm a big fan of Mark's as well, and it's kind of funny. We were talking in the pre-room that, you know, as soon as he gave me this invitation, I get Broker's World, and of course there's Marc Glickman all over Broker's World magazine. And then in my email box, I get George Grombacher's Money Savage, and there's Marc Glickman. So I'm a big fan of yours as well, Mark. So thank you all for having me. I think we're going to have a fun time this morning. My asks today are very simple. I would just ask that you don't multitask. Put away your phone, put away your email, take some notes. Between Mark and I think we're going to share some powerful information for you. Write down any questions you have. I'm not in a rush, so we'll stay in. We'll take any questions that you have, and if you stay to the end, as I always do in my webinars, I will give a special opportunity. So as Mark hinted, I've written now 5 books on retirement. My first book is that book, Paychecks and Playchecks, and I always tell people I'm a reluctant author, never want to write a book, didn't dream writing a book. It wasn't on my bucket list, so why to write a book? Well, here's why. Because right now, if your clients talk to 50 different financial advisors and ask them how they're supposed to retire, they're going to get 50 different opinions. But there aren't 50 optimal ways to retire. There's really one optimal way to retire, and that's not my opinion. It's based on mathematical, scientific, and economic facts. Retirement's been studied by PhDs all over the world. People like Dr. David Babel of Wharton, Dr. Moshe Milevsky of Toronto, Dr. Menachem Yari of Israel, most recently Dr. Robert C. Merton, a Nobel Prize winner who's published in the Harvard Business Review. And so what I talk about is really the math and science behind a successful retirement, and long-term care plays a key role. In fact, Paychecks and Playchecks closes with 4 simple steps to have a happy and successful retirement. Step number 1, they should cover their basic living expenses with guaranteed lifetime income. Step number 2, they should optimize the rest of their portfolio to protect themselves against inflation. Step number 3, they must have a plan for long-term care. No retirement plan is complete without a plan for long-term care. And step number 4, the most efficient way to pass wealth to children, grandchildren, and charities is with life insurance. Well, if I had to summarize the whole book, I'd kind of summarize it this way. What day of the week do you spend the most money? What day of the week you go golfing? You go to Home Depot, get your nails done, get your hair done. Well, for most people, that day is Saturday. Well, guess what? The day you retire, every day is Saturday. And I have learned that firsthand because I did a trial retirement this summer. I've been retired for the last 3 or 4 months. Now I'm going back on the road next week, but I've been retired for about 3 or 4 months. I've been living the retired lifestyle. I've been golfing. I've been playing tennis. We've been out boating, doing just fun stuff. But you want to know what? Every day is Saturday, and you do spend the most money. And so we'll go out for like a happy hour that I think is going to cost me $8 for a happy hour. And all of a sudden it's an extended happy hour. And then some friends show up and now it's dinner. Oh yeah, put that on my tab. And all of a sudden it's $280, not $8. And so this happens like every day in retirement. It's crazy. And so every day is Saturday. The other thing is, when I gave my Paychecks and Playchecks presentation down in San Diego about 5 years ago, there was somebody there from PBS, public television. And they said, Tom, we need to take this information out to the general public because they're not getting this from the other talking heads on TV, but we don't think they're going to understand this paycheck and playcheck thing. We would need a simpler title. So I wrote another book. It's called Don't Worry, Retire Happy, because I think everybody can understand that. And this is now played on PBS in over 80 million homes in the US and Canada. And one of the key steps is long-term care. So I talked to 80 million people on the importance of long-term care. But here are the 7 simple steps. And you say 7. I thought you said there were 4. Yeah, well, that was Paychecks and Playchecks. This was TV. We had to add a few, okay? And these are good additions. So step number 1, they got to have a plan. How can they get anywhere if they don't have a roadmap or a plan of how to get there? And with this, I say they've got to work with a financial professional. Retirement is not a do-it-yourself project. Look, I do, thousands of seminars, and in my seminars, I say this: I'm willing to bet you don't do your own dental work in your garage with your drill set. And I don't think you ought to be doing your own retirement planning either. Step number 2, we need to teach them how to understand and maximize their Social Security benefits. See, for most clients, Social Security is the largest retirement asset they have. And yet people spend more time planning their summer vacation than learning how to maximize those valuable assets. Step number 3, they should consider a hybrid retirement. Too many people are trying to retire too early. They haven't saved enough money. And we should encourage our clients to work a couple of extra years. Even if it's part-time, it can increase their success in retirement significantly. Step number 4, we've got to help them protect their savings from inflation. Inflation is like a virus that gets worse over time. This is where stocks can fit, mutual funds can fit, real estate can fit. They can build a diversified portfolio that if we get inflation, the portfolio goes up and there's more money to take out more money. But they can also protect themselves against inflation by laddering their lifetime income annuities. That's what I've done. I own 11 income annuities. I have some that start when I'm 60, some that start when I'm 62, some that start when I'm 65, some that start when I'm 70, some that start when I'm 75. So I will have increasing income for the rest of my life. Step number 5 is critical. They must secure more retirement income. See, a successful retirement is built on income, not on assets. And most people are worried about their assets. They're not worried about their income, and it should be the other way around. But step number 6 is the one we're going to talk about today. They must have a plan for long-term care. And I say any plan is better than no plan, and Mark and I will discuss that in a little while. Step number 7, use your home equity wisely. For many of your clients, their house is one of the largest assets they have, and I share, in the book and in the videos, some ways that they can simply use their home equity. And then I normally wrap up with the most efficient way to pass wealth to your spouse, to your children, to your grandchildren, to charity, is with life insurance. So let's hit steps 1 and step 6 because they both fully apply to what we're talking about today. So step number 1, they got to have a plan. The Hartford said those who plan for retirement are 3 times more likely to be confident than those who don't, who have not planned. And the reasons are simple. If you've got a plan, if you've thought out what happens if I need what happens if I have an unexpected long-term care event, what happens if something else happens, you got to have a plan that can handle contingencies. It's not just what you want to happen, but what are you going to do if something bad happens to you? And that's all about planning. The other thing is, I always tell people, this is not a knowledge business anymore. Everybody thinks it's a knowledge business. This is not a knowledge business anymore. You give me an iPad, the internet, 15 minutes, I can figure out anything I need to figure out. This is now a words business. It's a language business. It's a questions business, and it's a stories business. You want to increase your production? Work on your words, work on your language, work on your questions, work on your stories. And that's why I think it's so important to follow people like Marc because he's got a lot of those words. I have some of those words that can help you and can fast track you. Now, a couple questions you want to help people with right out the gate. Question number one, what do I need my retirement income to do? But then maybe more important, what do I want my retirement income to do? Now, what we need our retirement income to do for all of us is the same. It needs to cover our basic living expenses, our food, our housing, our clothing, our cell phone, our internet. I call that the paycheck. And what math and science demands is that paycheck should be covered with guaranteed lifetime income. So that is not where stocks fit. That is not where bonds fit. That is not where real estate fits. That's where guaranteed lifetime income fits, to at least cover basic living expenses. But then what do I want my retirement income to do? That's the paycheck. That's the travel. That's the cruises. That's the fun stuff. And those other products fit fine right there. But here's the problem. Many of your own clients are not fully enjoying their retirements. And you've all got clients like this. They're in their 60s. They're in their 70s. They got plenty of money. Many of them don't even touch it. You know, when I was an advisor, I used to bust my clients. I'd say, wait a minute now, you told me when you retired you're going to join the country club, you're going to buy a new boat, you're going to go on a cruise, you're going to see the world. Have you done that yet? You know, many of your clients will say, no, we haven't done that yet. You know why? Because just in case, interest rates are so low, you know, the market's been so volatile, Bitcoin just crashed. They're living what I call a just in case retirement. And here's what it looks like. They don't touch their money, and they don't touch their money, and they don't touch their money, and then they die. What happens to money? Goes to kids. What do the kids do with it? Oh, they join the country club, they buy a new boat, they go on a cruise, and they see the world. Look, this is happening all over the country. And what I want to make clear today is this. I want you and your clients to join the country club. I want you and your clients to see the world. I do not want you and your clients to live a just-in-case retirement. Okay, so let's get into the meat of what we're talking about. Step number 6 in Don't Worry, Retire Happy is you must have a plan for long-term care. In fact, Paychecks and Playchecks, the title of the chapter was, What's Your Plan? What's your plan? Because if you've ever heard me speak before, you know I always brag about my plan. My plan is I never have to go to a nursing home ever. I get to stay in my house for the rest of my life. The nurse has to come to me. You know why? Because I got a plan. I've got long-term care insurance with home health care. I get to stay in my house. So when somebody tells you, I don't want that nursing home insurance, your answer ought to be exactly, this is anti-nursing home insurance. This is stay-at-home insurance. This is stay-in-control insurance. So let's get into this. You know, everybody thinks retirement's going to be 30 or 40 years of golf, tennis, cruises, and line dancing. That is not true. You are going to go through 3 distinct phases in your retirement. Let me show you what your retirement's really going to look like. The first phase of your retirement is what I call the go-go years. Now, the go-go years, you're playing golf, you're playing tennis, you're going on cruises, you're line dancing. Every day it's happy hour somewhere. That's the go-go years. But make no mistake about it, the go-go years are going to be followed by the slow-go years. Now, the slow-go years, you can still do everything in the go-go. You just don't want to anymore. In fact, you don't want to go downtown after 4:30 because dad can't see when it's dark out. That's the slow-go years. And the slow-go years are going to be followed by the no-go years. And the no-go years are those years when you're probably not leaving the building till you're leaving the building, if you know what I'm talking about. So you got go-go, slow-go, no-go. This is what I've learned watching my parents go through these phases. I learned that the go-go years is all about income, not assets, income, which is why 100% of my purchases are going for income in my go-go years. Now, this income lasts me for the rest of my life, all right? But what I'm trying to do is have the most amount of income during those go-go years, maybe from 60 to 75 or 60 to 80. Those are kind of the go-go years when you still can go out and do stuff. The slow-go years is all about long-term care. Any plan is better than no plan, and we're going to talk about that. And the no-go years, that's all about life insurance. Now, I've had people say, Tom, life insurance has nothing to do with retirement. Wrong, wrong, wrong. Life insurance has everything to do with retirement. Do you understand it's a life insurance you bring into retirement that gives you the license to spend your money? You want to know why so many of your clients are miserable in retirement? Because in the back of their mind, they think they got to leave their kids some money. Oh, we got to leave some money to Johnny and Susie. We got to leave some money, Johnny and Susie. So they deny themselves their retirement to leave money to their kids. I tell people every seminar, don't leave your kids any money. I want you to spend all of your money, every last nickel. I want you to spend every last nickel. I want you to write a check to the undertaker and it should bounce. Okay, that's what I want you to do is I want you to leave your kids life insurance. Let me use me as an example. So we got 4 kids. So one day we're sitting around saying, hey, how much should we leave to the kids? I don't know. What do you think? I said, well, if we bought a $1 million second to die life insurance policy, name the 4 kids beneficiary, when we're both gone, they're going to get $1 million tax free That's $250,000 a piece tax-free. Let's start there. So we bought a $1 million second to die life insurance policy, naming 4 kids as beneficiary. That policy is completely paid up. Do you know what the total cost of that policy was? $150,000. So now think about that. For 15 cents on the dollar, we get to transfer $1 million tax-free to our kids. Hey, who gets to spend the rest of the money? We do. I want you to spend your money. I want you to leave your kids life insurance. So let me go into why questions are so important, and we're going to get into long-term care questions, and we're going to get into all the meat of the long-term care. Questions are important because asking questions avoids arguments. I don't know how many times you got in an argument with a client, but it doesn't end well. And it happened because you said something very strong on one side and they had an opinion very strong on the other side. See, your opinion really doesn't matter. Ask them what their opinion is. Don't get into arguments, just ask questions. Ask questions. Asking questions helps you avoid talking too much. I was a manager too, and I would take new advisors out on an appointment, and guess what new advisors do? They talk and talk and talk. Oh, this policy does this, and it does this, and it slices and it dices. Oh, and it has this too. Stop talking. Start listening. Ask more questions. Triple your questions, you'll triple your production. So telling is not selling. Telling is not selling. Listening is selling. Asking is selling. Asking questions helps a person recognize what they really want. It crystallizes their thinking. It becomes their idea. Asking questions helps you get to the key issues faster. And when you ask questions, it shows you respect their opinions, and they're going to now respect your opinions when it comes time at the closing interview. Okay. So in between those two books, I wrote another book, Retirement Income Masters, Secrets of the Pros. This one is very different. So Paychecks and Playchecks is the math and science behind a successful retirement. It's my words, my language, my stories. Don't Worry, Retire Happy is the PBS special. It's broader. It covers wider area of stuff. This one was very different. What I did with this book is I went around the country. I found 14 top producers. Most of these people are top of the table producers, and each chapter is their story. What do they do? What do they say? What are their questions? If you're looking for a book of questions, this book is loaded with powerful questions. So let's get into some long-term care questions. Before you get into your presentation, why don't you say, hey, tell me about your understanding of long-term care insurance and how it works? Wouldn't you want to know what they're thinking and what they know about the product before you make your presentation? Ask them this. Have you ever had a friend or relative that needed long-term care? That is a powerful question. Now, Mark, I know your grandparents needed long-term care. Both of my parents needed long-term care. So it becomes very personal if they've had somebody that has gone through it. You know, what is your philosophy about long-term care insurance? Where did you learn about long-term care insurance? Is home health care important to you? How much coverage should you have? Those would be some of the questions that I would ask. But Mark, I'm going to turn to you now for just a second, because in this Broker's World magazine, you put some great questions in there. And one of your questions was, what do you think other people are paying for long-term care insurance coverage? Tell me why that's a very powerful question. I mean, I think I know, but I want to hear why that's a great question.
Absolutely. It gets to the heart of why somebody is not going forward with the plan. The number one reason people don't get long-term care insurance is because they think it's too expensive, or they think it's going to become too expensive. So when you help them identify what it could cost, and it can be very affordable, as those of you that know the NGL product, for example, you can get to very low price points. Once you kind of take away that fear factor that there's an entry-level point where they can get a plan, it allows you to have the conversation. And guess what? When you show the cost of care, they'll usually buy more. And they'll want to kind of benchmark it based on what other people are paying. So that's a great question to ask.
And then, you know, what percent of your income would you be comfortable to spend after you've covered all your basic living expenses? That was another question that you had in there.
Yeah, and the reason why you want to ask this question is, as Tom mentioned, this is an income problem for a lot of people, and they want to actually use their income to pay for it. They want to do maybe a recurring premium. So if you understand what percentage of income they're comfortable spending and what percentage of income that might protect in retirement, you know, similar to what you might see if you're familiar with disability income, you're actually going to get to a comfortable price target, and you're not going to have to feel like you're asking them what do they want to pay. You're just kind of using a kind of a mathematical benchmark to say this is what someone in your income bracket might spend.
I love this one. What asset might be repositioned to provide coverage longer or better? Because Mark, as you know, annuities that had, let's say somebody bought an annuity 20 years ago and never touched it, it's got all this gain in there that's taxable, but that can be 1035 exchanged over to pay for long-term care insurance. And then I'm reading this broker's world, and you were talking about how HSAs can pay for long-term care. So talk about that for a minute, because I think this is something that even pretty experienced advisors are still learning some of this stuff.
Absolutely. You know, when you identify funding sources, it leads to a very positive conversation. People like to talk about their successes in life. And it leads to you talking about, okay, yes, I have this HSA which has funds in it. Did you know you could use that to pay for long-term care insurance premiums pre-tax and still get the benefits tax-free? Or for the asset repositioning, when you start to identify assets, let's say you have a non-qualified deferred annuity, did you know you could use that money to use it to buy a single premium long-term care policy, and all the gains actually get transitioned to pay for the premium instead of getting taxed on those gains? That leads to that asset repositioning sale. And you see that a lot with hybrid style products as well, where you're moving money from a low earning CD or savings vehicle, and you're using it to get significant long-term care benefits. So it's really about, if you identify the right funding source, it leads you to a comfortable price point, which then again gets somebody to put a plan into place.
Yeah, I think it's so critical, and they don't have to write a check out of their checkbook, and they can say, oh, you mean I can just move this over here? Oh, you mean this old HSA that's just been sitting here, I can use that? Oh, that's awesome. And so when you can find that funding source, you really can make the sale a lot smoother. And then how much do you pay for your other insurance coverage, your car insurance, your homeowner's insurance, your life insurance? I think that's a great question. Tell me a little bit about that one.
Yeah, and Tom, I know you're going to talk a little bit about this, I think, later, but people think about long-term care and they say it's use it or lose it. Well, why are you buying auto insurance and homeowners insurance, right? Those coverages you don't expect to get benefits on. In fact, you don't want to get long-term care benefits. You don't want to be chronically ill. So if you don't have the event, you're actually happy. If you do have the event, you want to get as much protection as possible. So really the mentality out there that they have to get a return on their insurance is kind of a strange mentality. It's a protection product first and foremost. So if they understand what they're paying for other coverages, it gets you to a comfortable price point, and it also gets them to think about, why do they own these other insurances and where long-term care fits for their protection.
Yeah, so the whole point of this part of the presentation is to get you thinking, to ask more questions. It's not just, oh, my policy does this, it does this, it does this, it does this. The power in the sale is asking them and getting them to talk. And one of the best homework assignments I could give you is to watch some Columbo movies. Have you ever watched Columbo? He hardly says anything. Oh, Mr. Johnson, tell me about the time, and he asks questions. And by the time he's done, he makes everybody so uncomfortable. They figure out what he's doing, but he doesn't say anything. He just asks questions. And so that's what I wanted to get on this section of the presentation, is how powerful questions are. Now, Mark, no matter how good we are at making our presentation and no matter how good we know the product, there are going to be some objections. Clients have objections. So let me just talk a little bit about objections, and then we'll get into the common long-term care objections, which I think is kind of the meat of the presentation. So why do clients have objections? Well, it might be a lack of knowledge. I just don't need it. It could be a specific concern. Oh, the cost of those long-term care policies is just too expensive. It could be a false objection. They want something else, but they won't say it. This happens all the time. And I will tell you, it happens to you all the time. You walk into Men's Warehouse and somebody says, hey, may I help you? And what do you say? No, I'm just looking. Well, you're not just looking. You went in there looking for something. And the good salespeople, if you notice, they say, well, that's great. We have a sale on right now. Our suits right here are 30% off. We got ties at 50% off. Are you looking for shoes or ties or suit? Can I help me out? And they just keep going. And that would be one of my best pieces of advice to advisors. Most objections are false objections. Do not get riled by them. Just keep going, just like the person at Men's Warehouse or Nordstrom's rack when you're looking for shoes. It could be a perception issue. I don't trust insurance companies. They're not safe. And they may not be clear about their interests. It's just not a priority. So here are some techniques that I think will help you if you get objections. First of all, thank them. If they're objecting to you, it's because they're listening, right? And they're still engaged. Empathize with them. Acknowledge it. Say, you know what? I hear that often. Or, you know what, before I got in this business, I believed the exact same thing. May I ask why? May I ask why? That's a powerful question, because you want to dig deeper, because as I said, many of the first objections are false objections. If they are objecting to you, they don't see the value. See, you might think you showed them the value. They didn't see it. So this would be a great time to say, let's go back one more time. I want to show you why this is so important for you and your family. Because remember, long-term care is really not about them. It's about their family. Let me show you why this is so powerful for your family and show them the value. Use third-party references and client references. Look, they do that to you all the time. Well, Susie Arman says this. Dave Ramsey says this. Ken Fisher says this. Oh, yeah? Well, look at what Marc Glickman said in the broker's world. Look what Tom Hegna says in Paychecks and Playchecks. Look what Dr. David Babel says. And find powerful third-party references that support what you're presenting. So here's some basic ways to handle objections. Number one, know your stuff. You got to know your stuff better than anybody else knows your stuff. And then not only that, you got to know your competitor stuff. I'll give you a quick example. When I was a brand new advisor, I was an advisor for MetLife, and I was a new advisor, didn't know anybody. I'm working the new home market. I'm selling a bunch of term insurance. That's what new advisors typically do. And I was getting my clock cleaned by New York Life. They always had a lower premium on term insurance, and I was getting my clock cleaned. I'm just so frustrated. So I finally got a copy of that whole illustration of policy, and I went through it and I found out, oh, they had a 1-year teaser rate. After that, they raised their premium a lot, and over 5 years or 10 years, my premium was lower than theirs. Once I learned how to beat that main competitor, I didn't lose another case to them. So you got to know your stuff, know your client, and give a very powerful presentation. Answer the objection in your presentation. I do it all the time. I talk about Ken Fisher in my presentation all the time. I talk about the fees all the time. So if you are getting long-term care insurance is too expensive, you need to put that in your presentation. You know, many people believe that long-term care insurance is very expensive. Let me show you how it's changed in the last 5 years. Let me show you how it's very affordable. You got to put the objection into your presentation. That is the very best way to answer an objection, is answer before it comes up. You can ignore the objection, say, that's okay. Oh, I don't believe insurance companies. That's okay. Let me show you why this is so important. That's what the Men's Warehouse or the Nordstrom's rack lady did when you came in to look at shoes, and she said, and you said, you're just looking? She said, that's great. We got a sale on these shoes over here. Oh, these are my favorite. Just come over here. Just take a look at it. That's what a good salesperson does, is they ignore that objection because it was a false objection anyway. Defer the objection. Say, that's a great point. I'm coming to that in 2 pages. I'll get right to that. Sometimes you got to handle the objection. And it won't really be an objection if you focus on helping instead of selling. If you're just there to sell a long-term care product, then it's an objection. But if you're trying to help them retire and retire with dignity, help them, you know, plan for what their family can do to help them, focus on helping instead of selling, then you're it's like, you know, I was in the military and we do these obstacle courses. The only way you get over the obstacle course is somebody has to boost you up, and you have to boost them, then you pull them up. It's all about teamwork. And when you're helping them, it's like you're just boosting them over a little, it's like a hurdle, and you're just helping them over the hurdle. It's no big deal. Show them the value. Again, if they're objecting, they do not see the value. You may think they did, but they did not see it. And use third-party references and client references. So let's get into my favorite part, the long-term care objections. People say, I won't need long-term care insurance. My daddy said this to me. He did. They didn't want it. They said, I won't need it. It's too expensive. We'll never need it. You know, it's an insurance company ripoff. My dad said all this. Well, here are the facts. The odds of your house burning down between now and the day you die are less than 3 out of 100. But you got homeowners insurance. The odds of you totaling your car between now and the day you die are less than 18 out of 100. You got car insurance. But the odds of you needing some long-term care are 72 out of 100. And you're going to let that one go? I mean, seriously? Look, we've got to show people that this is something that they've got to have. And both my parents needed long-term care. I've taken the 23andMe, you know, the gene testing, and I've got some of those same genes, so I'm likely going to need some long-term care. And we've just got to tell people, look, this is a serious thing. As people live longer and longer and longer, it's more likely they are going to need it. And Mark, please chime in on this, and I'll let you chime in on every one of them, because you have a lot of experience in this area.
Absolutely. And I know, Tom, that you have, you know, a lifetime benefit long-term care policy, and you kind of practice what you preach here too. I will say that what's emerging as a really important thing beyond the stats is what happens if, let's say, it does happen to you. So let's say you never think you're going to need it, but what happens to your family if you end up needing a long-term care event? Remember I mentioned the 44 million caregivers? That's 1 out of every 6 adults is actually, you know, a family caregiver, an unpaid caregiver. So this is an epidemic out there. So when you talk about this, also talk about the consequences on the family. What do you talk about when you sell life insurance or disability income, right? Life insurance is not for the person who buys it, right? By definition, it's really for the family. It's the same thing with long-term care. It's the same conversation with long-term care. So make sure you also mention that too. Tom, you still with us? So I've lost Tom.
Mark, I'm back. Sorry about that.
There you
Something happened. I went into the stratosphere. Okay. Number
go.
two, it's too expensive. I always tell people, if you think life insurance is expensive, or if long-term care insurance is expensive, you ought to try not having it. Okay. I made my parents buy long-term care insurance 16 years ago. They didn't want to. It's too expensive. We'll never need it. It's an insurance company ripoff. They said all that. I made them buy it. They were both in assisted living. $10,000 a month. $10,000 a month. Do you understand there were years my dad never made $10,000 a year? $10,000 a month. I can't imagine what they would have done if they didn't have those policies. And here's the deal. My parents didn't buy great policies. I would have never bought those policies. They didn't buy them from me. They bought them from some guy up in Minnesota. They weren't, really super great policies, but they gave them each about $250,000 of coverage. Well, guess what? That lasted for the rest of my dad's life. My mom's is going to run out here shortly, but because they had that for the last, 5, 6, 7 years, we've been able to save their Social Security, their pensions, all that money was been able to save. My mom will be fine, but she wouldn't have been fine if they hadn't had those policies. So, Mark, maybe you want to chime in on this one too.
Yeah, what I'm finding is that when you talk about the amount of benefits, Tom just mentioned 250,000 of benefits. In our world, that's actually on the lower end side. We're offering policies that have $1 million of benefits. You need to talk about the amount of benefits relative to what the cost is, which might be a few $100s a month. If you've ever used the Benefit Buddy software, the NGL software, it actually shows you kind of that cost value proposition. It's a very powerful tool because it gets people thinking about, wow, why does this look so good? It doesn't sound too expensive, again, when you're showing those total benefits. And again, the cost of care helps you understand why those benefits are so important.
I pulled this one out of the archives, Mark, when I was at New York Life. I was in charge of their retirement income push, but I was also in charge of their long-term care insurance wholesalers. And we tried to do some things to combine the two. And so what we did was we found a way to basically have almost like a single premium long-term care policy by putting a lump sum into an immediate annuity, how much income that would provide to pay for a long-term care premium. And of course, the premiums were not guaranteed or anything, but I think if I'm correct, you have an actual single premium long-term care product. Is that correct?
Yeah, so you could put, let's say, $100,000 guaranteed premium into a long-term care product and maybe get $1 million or $2 million or even more coverage, especially for people that are younger with the inflation protection at the point in time and when they need it most. So you can really, use that power of that insurance leverage, so to speak, to get the most benefits there.
And that had some guarantees on the premium as well, didn't it?
Right, yeah, so if you prepay the premiums, of course, a single premium is a guaranteed premium. Right, so people say, oh, I'm worried about long-term care rate increases. Well, did you know you could prepay your premiums? And if you do that, then you don't have to worry about it. If you do a 10-pay, once you pay your 10th premium, the premiums are guaranteed after that point in time. So you're really limiting the risk and handling an objection that's out there, but allowing you to show the value proposition and doing something similar to what you're seeing in the hybrid side with the asset repositioning at the same time.
Well, my wife will take care of me. I hear this all the time. Well, Tom, my wife will take care of me. And I say, oh, really? Okay, sir, I need you to lay down on the floor right here. Now, ma'am, just come on over here. Just pick him up and carry him downstairs. Put him in the car for me. I'll wait. Well, I can't do that. If you can't do that when you're 67, how the heck are you going to do that when you're 87? That's long-term care. I don't think people realize how much physical work long-term care really is. And there have been studies that show that people who are giving long-term care, that their life expectancy goes down because it just drains them physically and mentally. And Mark, maybe you have some comments on this one as well.
Yeah, I always think about those 44 million caregivers. About 60% of them are the kids. And the reason, of course, it's the kids is because the spouse, like you said, is going to be of a similar age, and there's hardly any expectation that they're going to be able to perform those functions. There are about 20% of those caregivers that are spouses. But can you imagine somebody, like you said, 87 years old, trying to shower, trying to pick up somebody that's 200 plus pounds? Just an unreasonable expectation. So when people say that as a denial, they really don't understand the process and what's involved at point of care.
And then, also the dignity that, do you really want to have your daughter, giving you a shower? Do you really want to have your daughter helping you go to the bathroom, or your son? I mean, these are real world, real life things, and it's uncomfortable to talk about it, but I mean, it's the real world out there.
Yeah, actually, I mentioned one more there, Tom, which I think is really powerful. I heard this from somebody that was a first-generation American. So they came from another country, and they said, why did you come to this country? Well, I wanted to provide a better life for my family. So you're training your kids. They're really well educated. They're becoming lawyers and doctors, and you want them to quit their job when you need care to take care of you. Does that make any sense? So if you really ask those questions, you understand what's important to somebody, it's going to lead you to a reason why they should be planning for this.
I hear this one too. Well, Tom, my long-term care plan's hanging the rack of that pickup truck right there. Yeah, they got a gun rack and they're going to kill themselves. Let me tell you, the nursing homes are literally overflowing with all these people who said they're going to kill themselves. You know why? Because they all forget. They all forget. This is a common objection. It is a false objection. They're not going to kill themselves. The nursing homes are loaded with people who said that they were. And I don't know, Mark, if you have anything on this one.
Yeah, and there's this whole host of different scenarios to different objections, which are very similar to this. But it's just about denial. It's just about this thought process. I need to come up with an objection excuse as to why I'm not going to do this plan. Just work with them. You don't have to even be selling them insurance. Just let me help you put together a long-term care plan. Even if they say they're going to self-fund, great. Let's talk about your self-funding plan. I will bet you that once you start talking about that and they start putting together a plan, it will lead to a conversation. Is there a better way to finance this plan? And you'll find something in the insurance world that can even hedge what they were planning to do. But get them to do a plan first, because that's the key.
Exactly. And then, of course, if I don't use it, I lose all that money. Well, look, there's ways around this one too, as you know, Mark. There's policies that have return of premium, that if they don't use it, when they die, the family gets all the money back. But that's where I think some of these hybrid plans come in, because I think a lot of people are limited on their funding. They don't have enough money to have an emergency fund, to have life insurance, to have long-term care, to have all this stuff. People say, oh, I'm insurance poor. So that's where I think one of these hybrid plans can come in, because it does three things. If you use a life insurance policy with a good long-term care rider, it kind of works like this. They take $100,000 that they had over at Bank of America that was earning probably less than 1% taxable, by the way, and they just move it over to here. Now, most of these policies have a way to get the money. Some have a full money back guarantee, some have limits, but I mean, you have that $100,000 available. If you need it, you can get to it, okay? If you don't need it and you die, you just draw a bigger circle. So I call this the 3 circles presentation. This is what I used to do. I draw a circle. Here's your $100,000 at Bank of America. If you don't need that, I draw a bigger circle and you die, it's going to almost double. There's about a $196,000 death benefit. And then I draw another circle. But what if you need long-term care? There's about $270,000 of benefit there. And even if you use it all, there's a residual death benefit. So it does really 3 things. It's an emergency fund, it's a guaranteed death benefit if they don't ever use it, and it provides money for long-term care. And I know, Mark, you use these policies as well. So kind of tell me from your point of view. And the premiums are guaranteed never to go up. That's another big thing. So kind of tell me your take on these hybrid policies.
I believe that every long-term care agent should have both traditional plans and hybrid style plans in their repertoire. With NGL, of course, you have a return of premium rider, which provides 100% return of premium if they don't use long-term care, kind of like what you see here. But it doesn't really matter which product you use. You just have to have both tools available to you, and here's the reason why. About half of people like the idea of getting this money back because they never expected to have long-term care in the first place. It's almost like the mentality 20 years ago from someone who didn't buy a long-term care policy at all. You can really address that today. So it's really important to have both sides. I will tell you that more common than not, I would say the majority of the time, I run into long-term care agents and they say, I only believe in traditional long-term care, or I run into agents say, I only believe in hybrid plans. And usually it's because of their own personal experience and biases with, whatever happened with that product. Maybe they had a rate increase. Maybe they've seen, the life insurance side. Maybe they've seen the long-term care benefits play out. Whatever that bias might be, don't have that bias. When you ask questions of your clients, they're going to lead you in the direction of one side or the other, and you're going to know which is the best fit for their plan. And that's the key. Get the client what they really want and what they need.
And I mean, some of the things they can have tax deferred accumulation of the cash. There's a money back guarantee on that policy. They can have access to, the policy's cash value if needed. It's flexible coverage. So, I mean, these types of policies can solve multiple needs with just one policy. And I think for some people, these are exactly the best policies for them because they're not ever going to be able to just buy a regular long-term care policy. Well, the government will take care of me. Oh yeah, that's what I'm working my whole life. I'm saving, I'm investing, I'm trying to do everything so that then I can spend all my money down, become destitute, and go on to welfare, which is Medicaid. I used to do seminars. I don't do this as much anymore because it kind of can rub people the wrong way. But I'd say, look to your left, look to your right. That's Medicaid. You're saying you're not going to take care of yourself, but you expect the person on the left and the person on the right to take care of you. That's Medicaid. And so, I mean, there's a whole moral issue here that we shouldn't be just dumping the care of everybody on everybody else, that we should each have some personal responsibility to take care of ourselves. But Mark, you probably have some powerful words as well on this one.
Yeah, absolutely. I will say that long-term care today, traditional long-term care, has long-term care partnership. So even if they do have the mentality that, okay, the government will take care of me, you actually have a solution for that person too. You could buy a 2 or a 3-year long-term care insurance plan, and when they exhaust their benefits, if they exhaust their benefits and have an extended long-term care event, the government allows you to keep your assets and still qualify for Medicaid. So regardless of what the mentality is, of course, most people don't want to, they want to have options. They don't necessarily want to be on Medicaid. They want to be able to get home health care. They want to keep their options open. But if they do have this mentality, there's even solutions that partner with Medicaid, and you can get them a plan that way too.
All right. Well, look, I'm just going to wrap up. We're going to take questions here. I've just got a few ideas for people. I always say, what next? If you don't do something with this information in the next 48 hours, you're going to forget it. We are recording it, so you'll be able to come back. But I would encourage you to sign up for my newsletter. It is free. All right. My most popular newsletter ever was this one, Why Ken Fisher Really Loves Annuities. And you should too. If you ever hear that your clients say Ken Fisher hates annuities, you can just Google Ken Fisher loves annuities, and I explain why he loves them. He's getting rich off of them, but he will hate them someday. My second most popular one was the 60-40 portfolio is dead, long-lived life insurance and annuities. And I just simply said that the average client out there is invested 60% stock, 40% bonds. And it might be more appropriate for your younger clients to remove some of the bonds, because bonds aren't doing anything and they have huge interest rate risk, to move that into permanent life insurance. And for your older clients, 60 and above, if they would just move 40% or some or all their bond funds into lifetime income annuities, they're going to see their returns go up and their risks go down. And Forbes magazine loved it, and they ended up putting it in Forbes magazine. So you can Google Tom Hegna Forbes. If you go to my website, you're going to find out I got all kinds of resources for you: books, audiobooks, DVDs, white papers, online training, coaching. What about my slide decks? I think I got some of the best slide decks in the entire industry, and they're all available for purchase on my website. I will tell you this: I'm a big believer in audiobooks and DVDs, and here's why. When I was a brand new agent, I was recruited by MetLife. I was a company commander in the U.S. Army, 7th Infantry Division Light. I didn't know anything about insurance, and I got recruited by MetLife. I said, well, that sounds interesting. I'm going to go work with them, but I didn't want to stay in California. I moved to Arizona, where I didn't know a single person, not one single person. I made $1 Million Roundtable my first year. Now, how do you do that if you don't know nothing about nothing and you don't know any people? It's because every morning when I woke up, I watched VHS tapes of the Kinder Brothers. I learned their words, their language, their stories that then became my words, my language, my stories. I went to the MDRT site. I ordered the MDRT tapes for the top producers in the world. And when I was driving from appointment to appointment, I was listening to the top producers. I learned their secrets. And I'm telling you, this fast-tracked me right to the top. And I can do the same for you in this retirement market. You're not going to get my words, my language, my questions, my stories by attending a 45-minute webinar. Why does the Army have me take apart and put together my weapon 5,000 times? I think I figured it out after 6 or 8 times. But after 6 or 8 times, you know it in your head. After 5,000 times, you know it in your heart. And what you got to do is it's repetition that gets you really smart. People are aligning with my brand. They're putting their name and picture on the cover of my book. So it still says Paychecks and Playchecks by Tom Hegna, but then it says with contributions from your name. You get to put your picture on the back, the whole back cover. You explain why long-term care and retirement is so important to you. One of the inside sleeves is about me. One of the inside sleeves is about you. And you can do that with either Paychecks and Playchecks or Don't Worry, Retire Happy. Top of the table advisors around the world are doing this. This was a Northwestern Mutual agent. He takes the Don't Worry, Retire Happy DVD, puts it in a bucket of popcorn with 2 Cokes and candy. He makes movie night. He lets me show the clients why they need life insurance, annuities, long-term care. He lets me make the presentation. They come in, they're buying life insurance, annuities, long-term care, and then he says, hey, bring that DVD back because I need to send it out to some other people. Hey, who do I need to send this to? And they give him 3 or 4 names, and he makes movie night buckets for them, and he rotates this around. We literally sell these DVDs by the case. Many companies have done this. It works all over the country. When I was flying a couple weeks ago, I saw something on LinkedIn and it said, pros have coaches, amateurs don't. Think about that. Pros have coaches, amateurs don't. It's football season. And I don't know who your favorite football team is, but guess what? They train every single day. Sometimes they do double, sometimes they do triple. They got multiple coaches. Why do we think in this business that if we want to be the very best, we don't need daily training? I would tell you, if you train daily, if you spend 15 minutes a day with me or with Mark or with a mentor, you're going to get a lot better over a few months period of time. So I put together an online training and coaching program that does 3 things. Number 1, training. Over 10 hours of my brain are online. All my words, my language, my stories, my questions, all of that's online, sorted by life insurance, annuities, long-term care, Social Security, sales ideas, combination sales ideas. It takes 10,000 hours to become a master at anything, okay? I've presented for over 10,000 hours. You got to spend time. You got to invest your time. And I cannot emphasize enough how you can get fast tracked. Look, I don't know how much I spent on those VHS tapes or those MDRT tapes. I probably spent $300, $400, $500. They made me millions and millions of dollars. I have helped create multiple millionaires in this insurance industry, thousands, tens of thousands probably of millionaires in this business. So I know training works. Coaching. What if you could bring me on every appointment? Do you think we'd close a few more cases? I've got a client coach built in here. It's interactive. You go to client coach, a video me pops up. It says, tell me about this appointment. Is your client single or married? Single. How old is this person? 72. Once you hit those 2 buttons, a video me pops up. Okay, so you're meeting with a 72-year-old widow. Here's going to be her key concerns. Here's the products you're going to want to use. Here's going to be the questions you should ask her. Here's going to be her objections. Here's how I would handle those objections, and I coach you before we go on the appointment. The next day you're going on an appointment with a 55 or 45-year-old couple. You hit married 45. A video me pops up. I coach you very differently. And the last thing is client education. Who is educating your clients? Susie Orman, Dave Ramsey, Ken Fisher, or would you rather have me educate them? You can rotate an unlimited number of clients and prospects through this site. And we even put the Don't Worry, Retire Happy video in there because some people don't have DVDs. You can just send them a link and they can watch it on their smart TV. Now, I normally charge $97 a month for that online training, coaching, and client education, and it's a steal at that. But because Mark brought me on here, if you want to, you can take advantage of this special offer. You can text HAPPY to 773-770-4377. At least write that phone number down because you may want it in the future. Text HAPPY there. You'll get all 3 of my books, all 3 of my audiobooks, the DVD, and my updated Social Security guide with all the new Social Security and Medicare information. We sell that for over $300 on my website. You can get that for $150. But I will also pay for the first month of that $97 a month. So you can try it before you buy it. There's no obligation. You can quit whenever you want. But I would tell you, if you would just spend the next 2 or 3 or 4 months with me every single day, I promise you, I can take your production to another level. So that's available to you. I'll wrap up the portion and then we'll take some questions. I can't tell you if the market's going to go up or if the market's going to go down. I don't know. Are we going to have inflation? Are we going to have deflation? I don't know. But I do know this. If you have a plan, if you work a little longer, save a little more. If you cover your basic living expenses with guaranteed lifetime income and optimize the rest of your portfolio to protect yourself against inflation, if you maximize your Social Security benefits, have a plan for long-term care, use your home equity wisely, and use life insurance as the most efficient way to pass wealth to children, grandchildren, and charities, I do know this. Each and every one of your clients can have a happy and successful retirement that's based in math and science, not based on some stockbroker's opinion. And with that, I think we are ready for questions. So, Mark, I'll turn it back over to you, and I think you got Lawrence waiting in the wings.
Yeah, and Lawrence Vivenzio will answer the questions. Thanks so much, Tom, by the way, for being on here. Other resources, just one more thing, one more plug I'll give for Tom is I found out about Tom, I searched on YouTube for Tom Hegna and I watched his videos, I just watched them in a sequence. So get to know his techniques here, and I think you'll be a lot more successful.